Debt Jubilee. Could all debt just be forgiven? What if I told you that one of the most radical economic ideas in human history is not new? It is ancient. Older than central banks, older than credit scores, older than student loans, mortgage-backed securities, and that one friend who says, "Bro, I'll send you your money tomorrow," and then vanishes into the witness protection program. The idea is simple. Cancel the debt. Not refinance it, not optimize it, not slap a lower APR on it and call it mercy. Erase it. A debt jubilee. A clean slate. A global economic Control-Alt-Delete. And the question is not just whether it sounds nice. The question is, could all debt just be forgiven? And if it could, would that save civilization or light the financial system on fire so fast even the spreadsheets would scream? What debt really is? Before we answer the Jubilee question, we need to understand one uncomfortable truth. Modern economies do not merely use debt, they are practically marinated in it. Debt is not some side character in the economic movie. Debt is the plot. Households borrow for homes, cars, school, emergencies, and the occasional terrible life decision disguised as retail therapy. In the United States alone, total household debt reached $18.8 trillion at the end of 2025, including $13.17 trillion in mortgages, $1.28 trillion in credit card balances, $1.67 trillion in auto loans, and $1.66 trillion in student loans. Governments do it too. The U.S. Treasury tracks public debt daily through its debt-to-the-penny system, and Treasury says that as of February 2026, maintaining the national debt cost about $520 billion, roughly 17% of total federal spending in fiscal 2026. So when people say, "Why can't we just get rid of debt?" what they are really asking is, why can't we remove one of the main load-bearing beams holding up the entire financial building? That is not a small question. That is like asking, could we remove gravity for just 2 weeks and see if morale improves? The idea is older than Wall Street. Here's where the story gets wild. Debt cancellation is not some fringe internet fantasy invented by a guy with 3 podcasts and a suspicious beard. Versions of debt remission go way back in the ancient world. In the biblical Jubilee tradition, described in Leviticus 25, the 50th year was meant to reset parts of the economic order. Land returned to original families, bonded laborers were freed, and the system was periodically prevented from hardening into permanent hereditary dispossession. The basic logic was brilliant. Without resets, debt accumulates, assets concentrate, families lose land, the poor get trapped. Yesterday's emergency becomes tomorrow's dynasty of misery. A jubilee was not merely generosity, it was a pressure release valve for society. Because ancient people understood something modern people often forget. When debt compounds long enough, it stops being an accounting tool and starts becoming a political weapon. In plain English, at some point, the spreadsheet becomes a throne. Why people dream of a modern jubilee. Now, let's be honest. The reason the idea of debt jubilee keeps coming back is because debt feels like a curse when it outgrows human scale. A mortgage can feel manageable. A credit card balance can feel annoying. A student loan can feel predatory. But sovereign debt, national debt, trillions upon trillions, that starts to feel theological. You stop asking, who owes what? You start asking, did we accidentally build an economy that eats the future for breakfast? That is why debt forgiveness movements keep appearing, whether for poor countries, distressed households, or bankrupt systems. And modern institutions do recognize that debt relief can be necessary. IMF research notes that sovereign debt restructurings have become more common, especially with domestic debt, because sometimes the burden simply becomes unsustainable. In other words, even the adults in suits sometimes admit, yes, this thing is too broken to pretend through, which is encouraging and also terrifying. Because when the IMF starts saying, perhaps the debt situation is complicated, that's economist language for the kitchen is on fire, but let's remain data-driven. So, what if we forgave all debt tomorrow? Let's run the experiment. Tomorrow morning, every debt is erased. Credit cards? Gone. Student loans? Gone. Mortgages? Gone. Corporate debt? Gone. Sovereign debt? Gone. International sovereign debt? Gone. At first, this sounds like the greatest morning in human history. People would cry, dance, text their ex, quit jobs they hate with Oscar-level emotional range. But then the second wave hits, because one person's debt is another person's asset. That mortgage on your house is an income stream on someone else's books. That government bond, it may be sitting inside a pension fund, an insurance firm's portfolio, a bank's balance sheet, or a retiree's safe investment bucket. Delete the debt, and you don't merely free borrowers, you vaporize creditor assets. Banks would take massive losses, pension funds could be impaired, insurance firms, money markets, and sovereign holders could be hit. IMF and BIS work on restructurings repeatedly emphasizes the trade-off. Debt relief can stabilize overburdened borrowers, but it also risks financial instability, distributional shocks, and moral hazard. The incentive problems created when people expect future obligations may also be wiped away. So, a total jubilee is not like erasing chalk from a board. It's more like pulling one thread from a sweater and discovering the sweater was secretly the global financial system. Who wins, who loses? If all debt were forgiven instantly, the biggest immediate winners would be over-leveraged borrowers. Households buried in interest payments? Relief. Countries crushed under repayment burdens? Relief. Companies drowning in debt service? Relief. Consumption might jump in some parts of the economy because people no longer have to route future income into old liabilities. Research summarized by the World Bank and BIS suggests that certain debt relief programs can indeed support distressed households and sometimes boost demand, but those same sources also stress the risk of distorted incentives and broader system stress if relief is designed badly. So the biggest losers would be anyone whose safe asset was actually someone else's obligation. That means retirees, bondholders, banks, pension funds, possibly governments, possibly your uncle who keeps saying, "I don't trust the market, I only buy treasuries." Sir, that is the market wearing a tie. And here's the darker twist. If lenders believe future loans might be wiped out politically, they lend less, charge more, demand more collateral, or retreat entirely. Which means the day after the Jubilee may be harder for the very people the Jubilee was supposed to help. No credit, no trust, no lending, just vibes and barter. Can I finance this truck? No, but I'll accept 3 goats and a generator. So, does that mean Jubilee is impossible? Not impossible, but total, indiscriminate, immediate debt forgiveness is probably less like medicine and more like economic carpet bombing. The more realistic version is targeted Jubilee, selective relief, structured restructuring, controlled recapitalization, balance sheet surgery instead of balance sheet beheading. This already happens in pieces. Bankruptcies, loan modifications, sovereign restructurings, student debt relief programs, mortgage forbearance, negotiated write-downs. The IMF's work on household and sovereign debt relief points toward a recurring reality. When debts become unpayable, countries and institutions often need mechanisms to reduce burdens, but they must do so while protecting financial plumbing and limiting incentive damage. That's the key distinction. A smart jubilee is not nobody pays anything anymore. A smart jubilee asks which debts are socially destructive, which borrowers are trapped versus merely opportunistic, which creditors can absorb losses, how do we preserve lending after relief, who recapitalizes the institutions that take the hit. Because the real problem is not debt itself. The real problem is debt that can no longer be serviced without cannibalizing the future. The moral argument. Now, let's leave economics for a second and talk morality. The debt jubilee idea survives not because it's easy, but because it forces civilization to answer an uncomfortable question. What do we do when legal obligations become socially
poisonous? Because sometimes a debt is legitimate on paper and catastrophic in reality. The ancient Jubilee tradition was built around restoration, not chaos, preventing permanent bondage, restoring social equilibrium, and acknowledging that an economy should not devour the people it exists to serve. That moral tension still exists today. There is justice in repayment. There is also justice in mercy. There is discipline in honoring contracts. There is also wisdom in admitting when the contract has become a death trap. And every serious society has to wrestle with both. This is why debt debates always feel bigger than economics. They are about power, memory, mercy, punishment, and whether the future belongs to the living or to old promises written by dead balance sheets. The final answer. So, could all debt just be forgiven? Technically, yes. Politically, maybe in pieces. Systemically, not without enormous consequences. A full, universal debt wipeout would not just liberate debtors, it would also destroy assets, destabilize institutions, shake trust, and likely freeze future credit. But that does not mean the Jubilee idea is foolish. It means its true wisdom was never cancel everything blindly. Its true wisdom was this: no society can remain healthy if debt grows faster than hope. There must be resets. There must be mercy. There must be mechanisms for release. There must be a way for the future to breathe. Because when every promise becomes permanent, every burden compounds, and every failure becomes lifelong, you do not have an economy. You have a prison with interest.